And welcome. It's Mary Ellen McGonagle here from the Orlando Money Show on Friday, October 17th. As always, this is the MEM Edge Show, where we bring you where the action is in the broader markets. I'm going to share with you some of the news that drove price action last week, another bumpy ride. First up, we did have those trade war fear and news continue to impact the markets throughout last week. And with that, we do have volatility remaining somewhat elevated. It's above 20. We're going to take a look at that. And we did see, of note, small cap stocks started the week out very strong with an over 5% move into Wednesday. However, there was negative news from the banking industry that pulled this group back, and we will get into that as well. Now, we did have producer price index and retail sales data that was due to be released. However, the government is still shut down, so that data was not released. So let's not waste a minute. Let's take a look at the S&P 500 and see where did we close the week. So here we are with the daily price chart of the S&P 500, and this is that volatility that I talked about as far as price movement being really highly sensitive to various news items. We also had earnings season begin somewhat. We're going to take a look at some of those stocks that came out with numbers and how the markets responded. But again, here on that daily chart, you can see the relative back and forth taking shape in the markets. Very quickly here, I'm going to take us into an intraday to give you a sense of where the markets closed for the week. So here we are. This is Friday's price action back and fill as stated. However, going into the last 2 hours, we did have a relatively bullish bias so that the markets did close today in positive territory. From here, let's go ahead and take a look at the NASDAQ composite. And I'm going to share with you, first up, this is a weekly chart that highlights the policies and how that in turn can move the markets. But let's go ahead for this week and take a look at a daily chart of the NASDAQ composite. And I've overlaid that volatility index on top. And the purpose here is to highlight this back and fill bar chart is going to be the NASDAQ on a weekly basis. And of note is when we see that volatility spike, you will see a pullback in the broader markets very naturally. And in turn, we can see where that volatility is residing now. We certainly are not overly elevated. However, you can see the markets over the past 3 weeks, generally 4 weeks, trending sideways. So let's take a look at the volatility index on its own. And this is that VIX, also known as the fear index. And you can see it did spike earlier today. Again, that bank news, among other trade-related news that came out today. But we did settle the week and the day around that 20.8 level. So anything above 20 is viewed as being elevated as far as volatility. Ideally, if we can get it back below that 17 down into that 16 level, that is going to point toward a market that is much more settled. So keep that in mind if you're considering putting money to work. And then also, as we move through, we're going to take a look at the sectors and industry groups and give you a very, very good feel for what is taking place beneath the surface of those broader market indices. So here we are with a 2-month daily price chart view of the 12 sectors in the S&P 500. And you can see up here at the forefront, we do have defensive sectors led by utilities, which at this point in time, in addition to offering those higher yields, utilities do, of course, there are select companies there that are providing electricity and energy to those data centers. So there's a dual push into those utilities. Healthcare sitting up here. This is that advance that took place with the Pfizer-Trump deal. And you can see that we are sitting up here relatively nicely as we move through these sectors. You'll see what I'm mentioning here. And then also staples potentially trending higher. Let's take a quick look at that chart because we did close just above that 50-day simple moving average. We have a nice positive RSI, and then we have that black line up through the red on the MACD. And last week I shared Pepsi. There are other names that are in that same industry group as Pepsi that are generally trending higher if you are of a mind to diversify. I know for me, I am still heavily weighted in technology, but let's take a look. This is last Friday's sharp decline, and you can see subsequent to that, that's similar to the broader markets, just a lot of bumpiness back and fill. However, tech did end the week up 2.4%. So it did outperform the S&P up 1.7, the Nasdaq up 2.1. So some pockets of strength there that we are going to get into. The top performing group this week was real estate. These are REIT stocks, and the group was up 3.3%. And a lot of this having to do with companies that are releasing their data, their numbers. They do not provide earnings. Instead, it's funds from operations, FFO. And we're going to take a look at a couple of names there as well that are picking up for those that want to, again, broaden out your holdings. So let's take a look at some of these areas that did not fare well. First up here is XLY. This is the consumer discretionary, and actually it did fare well. There's a sub-industry group that we're going to look at that did not, because consumer discretionary overall, this sector was up 2.5%. I will tell you, a lot of that having to do with auto stocks that are on the move higher, but we do not have bullish momentum. The RSI below 50, that MACD down below zero, and we would like to see a crossover and a move higher, but I am going to share with you some downtrend reversal candidates in the consumer discretionary area. Moving along, basic materials, rather mixed, but when we get into that next area of today's show, I will share with you one area that hit another new high that is in the basic materials grouping. Let's take a look at financials. This was big by way of news, and as far as being impactful in the markets, this is XLF, the financial ETF, and it was down about 0.3%, a little bit of a dead cat bounce today, but we do have a negative RSI and a negative MACD, and this is all about at least two banks discussing loan losses due to fraud. And quite frankly, I didn't view the numbers as being extremely high, but it was enough to shake confidence, and so we did see a sharp pullback in the financial sector. Let's go ahead from here and take a look beneath these ETFs that are showing us the sectors. We're going to look at industry groups. This is going to help refine your knowledge as far as where that relative outperformance is taking place in the markets, all about areas that you ideally want to overweight if you believe the move into them is going to be prolonged. So first up here, we have gold stocks, and I did mention XLB, the materials sector, had one group, and it is gold, sitting up here at a new high in price at about 400. And I will tell you, Wall Street, it's varied, but going into the end of 25 and then into 2026, there are several Wall Street firms that are calling for another move higher up to that 500 level. Now, from here, when looking at these groupings, you will want to drill down into an intraday, quite simply because we are very extended, and you will want to use this, in this case, a 15-minute. You can drill out to a 1 hour, but the primary purpose here is this is a pullback that took place into the open today because the US dollar was exhibiting strength. However, we did close the day back up above the 5 and 13 simple moving average, but we don't have a bullish RSI, nor do we have a bullish MACD. So for those that want to trade gold when it's sitting up there quite high, oftentimes drilling down and narrowing it further to a shorter chart will help you in potentially trading this stock or this trading this ETF. Let's take a look at IBB. It's another area that is continuing to remain firm, finding support above this upward trending 10-day simple moving average. The group did outperform the S&P and the Nasdaq, all about a lot of new developments taking place among these biotechs and AI being the driver because these companies are able to speed up their development by use of these AI models. Moving through here as well, let's take a look at semiconductors and a bit of a bouncy ride this week, but net, nice uptrend. We're still up above that 10-day simple moving average, positive RSI, and a positive MACD. So there we are with the overall strength in the markets. From here, let's take a look at the Russell 2000 index. And I talked about the sharp advance it had going into Wednesday's close and then Thursday's deterioration in those bank stocks. Because in the small cap Russell 2000, it does have a portion that is in the financials that are rather large relative to those other industry groups. And you can see that the decline did cause a pullback in those small cap stocks. Also, another area of note in healthcare is that IHI, this is that medical devices ETF. And the reason I'm highlighting, I'm going to pull up a weekly here, and quite simply, it's a group that has exhibited volatility, certainly since the election, a lot of it having to do with new policies in the healthcare space. But when the group gets going, as far as a nice uptrend developing, it can really be productive as far as if you are in names that are benefiting from that uptrend. Here we are with a monthly price chart, and I'm taking us back to these prior periods, certainly COVID back here, 2020 and other areas, but we are still in a multi-year sideways price movement for the medical products area. So when we do have liftoff, you will want to be aware of it. So we're seeing a bit of an uptick, not enough to get excited about, but going to keep an eye on that one. Also, I talked about consumer discretionary. There was an area that underperformed, and it is retail. Now, this is that sharp drop last week, certainly because of tariff fears. We did see a nice bounce back into Wednesday and then a subsequent pullback. So that retail space is very mixed. But I am going to share with you some names that are firming up a little early. You will want to get a watch list together once those fears as it relates to tariffs and interest rate policy subsides. We could see a nice move back into those retailers. XHB is the home builders. We saw a bit of a snapback rally on Tuesday, but then fizzled into the close for the week. So not much to discuss there. And we do need to take a look at KRE. This is the regional banking ETF. And you can see that it was suffering going into that news that had investors nervous as far as loan defaults and brought back a lot of fears as far as the banking industry. And we're now back down below that 200-day simple moving average. You can see that we have a negative RSI and a negative MACD. But if we zoom out and take a look at these industry groups, it is concerning that we have a number of them below their key 50-day simple moving average. And on the constructive side, it is the more defensive gold stocks that are sitting up here. However, biotech and semiconductors are viewed as a bit more risky, and they are sitting up here at the forefront, but it does imply a very selective market as far as areas that are working and not. And then let's take a look at the yield on that 10-year treasury. And this is one area that we want to see decline as far as benefiting the broader market. So we did close the week at that 4% level, which is generally constructive for a broader market to be supported. Now, I mentioned I was going to talk to you about companies that reported their earnings this week. So we are going to take a look at a few of these names so that you can get a sense of what is taking shape. Here we are with American Express, AXP, and the stock did have a very strong day today after reporting very strong earnings. And we did have, I'm going to mark this chart up because we had a very nice base breakout on heavy volume. And the reasoning for this big move higher is because the company is increasing the fees on their credit card. In particular, their Platinum card is now going up to $875 a year. And I can recall when it was a mere $400. But this is where the company is outpacing other credit card companies with these annual fees that provide cardholders benefits. So we can see that the RSI appear in positive territory. And we actually are just on the cusp of a breakout, but super high volume. And we did get that nice black line up through the red MACD crossover, which is quite bullish. Of note as well is the fact that we were not sitting at a new high when the company reported those strong results, and hence we did see quite a big move higher. Let's take a look at another company that was down and out and did see a pretty big jump on earnings, and that's JBHT, JV Hunt Trucking Company. And here we are with the release of their earnings, this big gap up, very significant, super high volume. And then we had that move into bullish territory for that MACD and then that RSI as well. And again, when you see that big move, oftentimes you will be well served to jump into an intraday chart to get a super near term feel for what may be shaping up as far as will that continuation pattern take shape in the intraday, and not so with JBHT, but take a look at it on Monday and you'll get a sense of whether this is buyers coming in on the close and if it could be supported and trend higher. Let's take a look also at companies that where analysts are revising estimates. And this is a very vibrant area of the market at this point in time because these analysts are not generally going to revise their estimates higher unless they have some kind of insight, particularly if the company is very close to reporting their earnings. So here we are with Western Digital. They're due to report their earnings in less than 2 weeks, about October 30th. And the stock did have a very nice advance this week, and it was all about several major Wall Street upgrades. The need for this particular company provides data storage, and that is a big part of AI and where the demand is quite strong. You can see the stock has had a multi-year advance, actually multi-month advance, and we can see now we're back above that 10-day simple moving average with that RSI positive in the MACD as well. However, we are sitting at a new high, but we were at other periods when earnings were released. So certainly one for the watch list. And then from there, a peer stock that also is heavily involved in that data storage, and that's Seagate STX. Now, they did not get an analyst upgrade, so you can see it's a little less strong, but we are trending in the right direction. This company is due to report on the 28th of October, but that concept of buying on that pullback, I don't see that near-term strength shaping up quite as well on that name. Let's pivot over to some of those retailers. I mentioned to you that I would share some names that are looking more interesting than not. Overall, it is a group that is not trending higher. We looked at that retail industry group as well. This is going to be more about getting that watch list together. So front and center here is TJX, and this is certainly one of the strongest in that retail area. And what I wanted to show you here is this base breakout that took place on Wednesday. And we did see a rather orderly pullback. This is that move down that we saw in retail bank stocks as well, but it did find support at this 10-day simple moving average. We still have a positive RSI, and then we did have that nice MACD crossover black line up through the red. Some of these other names that I'm going to be sharing with you in the retail space are really down and out, but again, for your watch list. And this is indicative of what we've seen, and most notably in the restaurant space. So this is Dutch Brothers. They are a coffee shop, and you can see that it did decline very sharply. We got into an oversold position, that RSI down below 30. And we are now advancing back above that 21-day. We did see a nice black line up through the red MACD crossover, but we're not quite in positive territory here with that RSI. So from my work, it is going to take work to really get above and advance beyond this sharp decline that took place. But again, when it can get going, let's go ahead and pull up a weekly chart. It is definitely one of those higher momentum stocks, but we are very much in the beginning stages of a potential downtrend reversal. Another name that we can look at that has historically, when it does well, it does really well, and that is Boot Barn. And this particular company is very, very prevalent among, for those that are country and Western music aficionados, you'll be aware of not just their boots, but they also have very popular apparel, brick and mortar, as well as an online store. So we did get that nice gap up into a base breakout, and then nice sideways price action consolidating this significant advance. We now have that MACD in positive territory, likewise with the RSI. Let's take a look at one last retailer. It's going to be in the apparel space, and that is Gap Stores, GAP, another retailer that is in the throes of attempting to reverse its downtrend. We would need to get back up above that 200-day simple moving average. However, the RSI for Gap is above that 50, and then we are on the cusp of a potential MACD crossover black line up through the red. One last name that we need to take a look at in this space is Walmart, and the company had a very big week. Here we are with an earlier Tuesday base breakout on big volume, and this is indicative. From here, I'm going to take us to an intraday chart and share with you what to be on the lookout for after you see a big gap up, sharp advance, certainly for a name as big as Walmart. And in turn, we did get that nice black line up through the red MACD crossover. We have the nice volume and a positive RSI. And this is all about the companies partnering with OpenAI. And apparently, they are allowing companies to shop through conversational AI online, and it's being touted as a way for Walmart to compete more with Amazon and other companies. But it's also indicative of Walmart's move and push into technology. And it's something that I wrote about in the Chart Watchers about 3 weeks ago, as far as Walmart's historical precedent of being ahead of their time, even in the late 60s, as it relates to the technological advances and taking advantage of them. So Walmart had that nice base breakout. From here, I'm going to take us to an hourly chart, because what we want to look at here is the sharp advance that took place on the day of that news. And then subsequent to that, we did pull back, but that RSI still remained in positive territory. So if you had gotten into the stock earlier, you could stay with the name. We do still have a positive RSI. On the lookout for a black line up through the red MACD crossover at some point to signal further near-term upside. And one other area that I did want to share with you is names that are in the AI super cycle. And that is one area that did continue to exhibit strength. And this is going to be all about, again, having that watch list of those big powerhouse names within AI. You will want to stay on top of them, because they're going to guide your decision making with other names in the same space. So big movers that we have seen lately, and one name that is certainly front and center on my watch list because a lot of the news coming out for Oracle, ORCL, is impacting other areas. We've seen that over the last 3 weeks, certainly starting with that gap up over a month ago and the impact that had on other AI stocks because Oracle had some wonderful announcements as far as spending going into AI into 26 and beyond. And the news this week is, and certainly today, the company was down 7%. They had their analyst day today, and some of the numbers that their CFO was talking about did not strike investors or Wall Street analysts as being as high as they thought. So, with that, we did see other names that work very closely with Oracle pull back, and these are going to be stocks that are called neo cloud stocks, and they've had a sharp run up. This is that in response to Oracle's earnings, NBIS gapped up and had a very nice uptrend. But here we are with news from Oracle about their growth prospects. And what I wanted to highlight here, by way of keeping you informed on how you should handle your big, faster movers, is you want to pay attention to that MACD crossover. I would not make an investment decision on it, but certainly that black line down through the red is signaling that this sharp uptrend, at the very least, has stalled. So what you want to be on the lookout for from here is a very potential decisive move back below 50, and in turn, that would signal further near-term downside. Another one of those neo cloud stocks is CoreWeave, CRWV. And what we can see on the daily chart here is the stock did pull back about 3.5%, so not overly concerning. But here's that gap up on Oracle's earnings. And then in line, we did trend sideways. So if you have that watch list relative to those AI powerhouses and have a good sense of auxiliary stocks that are going to benefit or deteriorate depending on how that larger name does, it's going to really help guide your decision making going forward. But as mentioned, we did have nice moves into some of these other areas. Let's take a look at one final chart here. We are going to look at Taiwan Semiconductor simply because the company did announce their earnings Thursday after the markets closed. And then in response, despite showing stellar growth above estimates, guiding growth higher for AI, we did see the stock pull back. And I'm pointing this out because Taiwan Semi is sitting at a new high in price. And this rather tepid response to those strong earnings could be indicative of what we may be in for because a lot of these AI names have run up going into earnings. So the push higher is just not going to be. We looked at JBHT earlier as an example of a down and out company coming in above estimates and gapping up. And that is it for this week. Have a fantastic weekend and go ahead and hit that like button if you like what you've seen. Comments, as always, are welcome. And I do have a link down there for my twice weekly MEM Edge report. This report will keep you very tuned in to where the market stands and how to trade the outperforming names on our suggested holdings list. Have a great weekend. See you here next Friday.